Okay, guys, let's get right into the stock market technical analysis. I'm just going to point out kind of what I'm seeing in the charts this morning. Haven't put out a video this week. There hasn't been a whole lot of really updates or changes to the technicals. So I do want to just kind of give you guys a quick update on that. Drop me a thumbs up if you're finding value. If you're interested in the private member group, I've been posting in there all week. Multiple trade ideas, multiple setups. So if you're interested in that, link in the description below on that one, and we'll get right into it, guys. So triple Q's tech sector, obviously still kind of hanging in there. You can see really for the last while, we've just been kind of stuck in this range and not really moving anywhere. I think that there's some support. I mean, short term, we're kind of right there at that support because you can see this uptrend line on the daily chart. They're trying to hold that. But if that breaks, there's still some support right here at about 434-ish. And again, that's kind of this range we've been in. So that's what I've got. I think we're in this range right now, 434-ish. And then the top of the range is about 440, 650. All right, that's resistance and that's support. And we're stuck right in the middle. So no real changes there. If I go to the XLK, just another kind of way to look at it, you can see here we're still in this bearish rising wedge. All right, there's your wedge, bearish rising wedge, negative divergence. Again, this is indicating a breakdown and probably pretty soon, but until we see it, they're just holding it in this wedge, and there's really no change really for quite a while. We've just been stuck in this wedge. XL, so that's really it on tech. I mean, we can jump over. You can see NVDA. They're playing this game of whack-a-mole. I don't know if it's the algos or what, but they basically, when I say they, I mean market makers, institutional traders. They're selling one and buying the other. So you can see most of the FANGs or the Mag 7 or whatever you want to call them are up today. NVIDIA and Tesla down. So money's just kind of jumping from one ship to the other, and it's keeping the Qs kind of within this wedge. In the tech sector, it's just not going anywhere. NVIDIA starting to break down. We'll see here, on this daily, there is this trend line here, and it does look like we're starting. We might want to just move this, though, because we've had a reaction right there. Maybe just move it to give it kind of the benefit of the doubt. I'd say we're still within support. It's just not clean enough of a breakdown. NVIDIA's run up quite a bit, so when you get an impulsive breakdown, you should know it. It should be a pretty big red candle, and so yeah, I'm gonna just move that trend line and say we're just within support still. Okay, so that's it really for the tech stocks. There's not much else. XLF, this is our financials. Again, just holding within this bearish rising wedge. It's kind of hilarious to see this wedge. You got it right there. There's the wedge. There's the negative divergence. It's all there. This is a bearish setup. All right, not actionable trade. But look at the wedge. I mean, they literally are. I mean, the algos that are trading this, they're just keeping it within this wedge. So it can keep on going. I mean, we can stay within the wedge. If I move out, you can see, I mean, the wedge pretty soon, you're going to get, I mean, right around March 24th, towards the end of the month, you're going to be at the point where there's no more wedge. So it's going to have to make a decision. It's likely going to get pretty volatile here pretty soon, I would think. Again, they might pop it to the upside. If I see that, I would put good probability it's a false breakout, and then it's going to roll over, and probably roll over pretty hard. Okay? So keep an eye on that, but still within the wedge. So no changes there. XLY is a consumer discretionary, and we're starting to break down on this one. Now this one, I pointed this out in a previous video, is mostly Amazon and Tesla. So you can see there's Tesla. It's down. Tesla is basically the anchor of this sector right now. It's got negative divergence, and we're starting to break that trend line. So let's, Amazon would be kind of the last holdout. So watch that one. If this one gives way, then XLY should completely give way. But this is the one that's kind of keeping that up. And you can see we're still just within support there on the daily chart. Okay, So that's that for Amazon. And you can see XLY is kind of just hanging in there while Amazon's still holding that support. XLI, industrials, again, holding support, no change. It's a bearish rising wedge. We've got negative divergence, but still holding that wedge. So all these sectors are looking the same. XLV, you've got the healthcare sector starting to crack. Again, the day's not over, and this is a daily chart, so you got to see where the day closes. As of right now, they're breaking it down. So keep an eye on that one. But yeah, you get a daily close, and this would be another sector that's broken. As of right now, we have XLY that's broken that uptrend line. XLV is starting to break. Looks like there's some buyers there, so we'll see where that closes. Okay, I'm going to run through some of these trade ideas that I pointed out, and then we'll just wrap up. Actually, you know what? I do want to look at gold. The thing with gold, and I want to look at bonds. Sorry. Let me flip over to that. So gold is, gold futures here, to me, if I can get my trend lines right. There, sorry, had to adjust for the contract roll. Gold, to me, looks like it's sitting there at resistance. You can see on this chart here, you've got, boom, another reaction, third reaction there. So sitting there at resistance. I'm anticipating a pullback in gold, and we're seeing it in the miners today pulling back because interest rates, they're rising. And so if you go to the 10-year Treasury, you can see here, big move in the Treasury. That's a good size move in the 10-year today. We still have an uptrend. All right, we are moving higher lows, and we have higher highs. So if this punches this most recent resistance level, it's about 4.33% on the 10-year. If you punch that, I think the market is going to take notice. All right, I think the market's going to say, okay, we can no longer keep going up with interest rates rising. They're anticipating the Fed's going to cut interest rates. And maybe they will, but again, if the 10-year punches, the market's probably going to sell off, and then maybe you get the Fed cutting interest rates as the market sells off impulsively. So I know the Fed fund futures still have a rate cut for, I think, June priced in, but that doesn't mean that cut's going to come on the back of strength and the market's going to rally because of the cut. I think what's possibly going to happen is we're going to see the 10-year start to spike. Markets are going to take notice. They're going to start to dump, and then the Fed will cut interest rates as the markets are falling impulsively. All right, just something to take note of there. And then if you look at the dollar, the DXY moving up today. So yeah, gold's kind of getting the notice. The miners are getting the notice that interest rates are rising. Dollar's obviously moving higher. But the market is still kind of in la-la land, holding up, thinking that all is great. So I don't know. Keep an eye on that. You know, those Mag 7 stocks, they'll start to break. You should see a break in the market. Okay, I'll go through some trade ideas, and then we'll wrap up. Again, ELF. We still have that bearish engulfing candle right there. That's still in place. There is, this is still an objective short. Now we do... so until that gets taken out, that's the top, all right? That's a topping stick. That's the top until that's taken out. If it's taken out, it's no longer the top. If it's not taken out, as it is right now, we treat it as if that's the top of this move. There is support, though, right here on this uptrend line. You can see there's another reaction right there. So that's the next breakdown or sell signal. We need to see that trend line get taken out. Once that's taken out, this thing should start to roll over. And probably right down to the 200-day. But until that's taken out, we got to give this thing, we got to kind of wait and see. The top is up here. They could pop it up and try to test it. That's completely possible. So as of right now, I don't know which way it's going to go. In the short term, could pop up, test that resistance level, or could break. Until we see what's going to happen, I don't know. ANF, another one. This one they're trying to recover the trend line. We'll see how they do it. I don't know. They're probably going to try to hold it right in here today. I can't see the I don't know. It just doesn't really look like anything's going to happen much today. So they'll probably kind of hold this right in here. But on ANF, you got this big uptrend line. You've got big negative divergence that's really just been building. You had an overshoot. You broke down. You're undercutting. It's resistance right now. I think it's a breakdown and a resistance. So that's how I'm treating this. And then I'm looking for more downside. But they're probably not going to let us know today. DVN, this one's been a long setup. Pointed this one out a while ago, starting in the private member group. All right, there's your resistance. There's your bullish divergence that I have marked out. And there's your breakout, and still looking good. So I don't see any change. I mean, there's no real divergence. If I go down to the hourly, yeah, still looks good. I mean, look, you've got bullish momentum. There's no negative divergence even on the hourly chart. So in general, there's no signs that this isn't going to continue higher. So this looks good. And this is an oil producer. And if I flip over to the oil stocks, you can see oil is starting to break out. Here's the oil futures up today. They've tried a couple times and it's failed, but so far today they're breaking out. So we'll see where that closes. If oil starts breaking out, it's going to put pressure on the Fed that they can't cut rates. And again, I mean, I think it would be hilarious if we saw the Fed cutting rates into rising oil. I don't think they're going to be able to get away with it. But again, the market continues to think that the Fed's going to cut rates into a strong market. I just don't think that's how it's going to play out. I really, if there's going to be rate cuts, I really think those rate cuts are going to come on the back of a weak market, a very weak market, and an impulsively weak market, a spooky weak market. Because if the market's just moving down gradually, I don't think the Fed's going to be cutting rates. If the market's moving down impulsively to where it's starting to spook people and it's moving quick, that gives the Fed, that gives them optionality to cut rates. So that's just my read on it. Okay, home builders. PHM is the one that the charts to me looks the best, but you can see home builders. We have, recently just made a new divergent high. Let me just extend this out. So that divergence just extended. Very similar to how the wedges on pretty much most of the indexes have extended the divergences. There you go. Impulsively getting rejected today. There was a little bit of support on this uptrend. It was marching up this. And you can see it basically broke, back tested, impulsive rejection. So I think that's probably it for that one. And I do believe we'll probably head back down to this support, which is about 99. Let me move this thing. 99.50 or so. That's where that looks like it's heading. So that's a drop as of right now of about 9%. Down there. And then ultimately, I think that's going to break, especially if interest rates continue to rise. Rising interest rates are bearish for the home builders, so keep an eye on that. Okay, sorry, I had a quick call. Just to wrap up, another trade idea. This is a long trade idea PFE Pfizer. So on the daily chart, just things to point out. Big bullish divergence that's been building for a while. And then if I roll out, you can see here's a downtrend line. Resistance, there's another reaction, resistance, there's a couple right through here, and that's a breakout. All right, that's a buy signal, a breakout candle. Now we're pulling back today, and if you go down to the hourly chart, you can see we did have just some negative divergence show up on the hourly. Here it is right there. Okay, so you see you got lower momentum, but higher high. So that's a divergent high, and now you're seeing the breakdown. So I think it's coming in for a back test of that trend line. And then again, that's going to be another buy point. Let me flip back to the daily. So if it pulls back to that trend line, that's support now. It was resistance, it's now support. So that's what I'd be looking at on that one. An objective long to buy at support. Okay, I think that's really all I have for today. So we'll keep an eye on those sectors. And if we start to see breakdowns in those sectors, especially the tech sector, then we'll get some sell signals. But so far, we're just kind of grinding around. Okay, get it out. Catch you on the next one. Bye.